Today, I often get asked, because we are very cash flow centric and there are loss making companies in our portfolio as well. So, how do you talk about superior returns on capital for a loss making company? Some of the new age companies that our team very much likes and owns for several years.
I remember doing a show when Zomato was listing with some of your team members, and there was a massive debate there about whether this whole price to sales, there's no earnings, how can you value a company like that? And of course, White Oak took early calls.
We've owned, its parent company since much longer, ascribing value to these investments that the parent company has made. This is one of the lessons I learned, I would say, early in the TMT bubble, .com bubble, when in my US portfolio, I never could buy Amazon.
Okay.
Thinking that it's not making money, and at that time it was also an assessment that it can never make money. New age companies, because there isn't an established business model to look back onto, people often just ignore them or write them off as something they won't look at. And that's the opportunity for investors like us who are willing to take a closer look.
We've reached that point again for these new age internet stocks where the debate is back on. They're investing a lot in dark stores, they're expanding in tier 2, tier 3. So suddenly some of them are saying that they've reached profitability, but maybe, at least in quick commerce, it can get delayed.
There'll be winners and losers. Having invested during the .com bubble through the late 90s and 2000s in US, where these kind of companies first came to market, having made mistakes there, both of commission and omission. Amazon is a mistake of omission, if you will.
Missed opportunity.
Missed opportunity. Then as on the EM, while in India, a lot of these businesses might be developing for the first time. That's not true globally. In China, this story has played out a decade ago. Alibabas, the Meituans, the Tencents, they're just further along in the journey to profitability than some of the Indian companies are.
Right.
The Mag 7, there's a cult-like following amongst Indian investors for the FANG. FANG was very widely followed 2 years ago.
Absolutely.
Majority of those FANG companies weren't making money or cash flows
When they started
when they were $100 billion in market cap.
Yeah.
Google was making money early on. But others, Amazon wasn't making money, Netflix wasn't making money.
So you have to be a patient investor if you're going to be on
Patient and selective. You can't have a spray and pray approach across all those. Not everything would become a Amazon or a Facebook.